Welcome to the PIP Resources Corp weekly briefing. In our quantitative research towards a full suite expert advisors development for MetaTrader platforms, we don't look for the perfect weeks. We look for high-fidelity data. This week, our flagship algorithms navigated a complex Yen Divergence that provided a masterclass in algorithmic resilience. Across 29 assets, our mission was clear: maintain a unified delta shield while adhering to the strict equity requirements of each institutional demo environment. While the markets were loud, our logic remained silent, auditing the math in real time. The Elite 5 Asset Profiles. 1. The General, also called PIP Resources Experts. Ideology. Directional priority. The logic. This is our structural anchor. It is designed to identify the path of least resistance in the market. Its primary function is to establish a dominant position and defend it using a tiered profit banking cycle. It doesn't fight the trend, it colonizes it. 2. The Sentinel, also called Domino de Dios. Ideology. Delta neutrality. The logic. The Sentinel manages chaos. By maintaining a 30-pair elastic trap, it seeks to stay market neutral. It doesn't care if the market goes up or down. It only cares about the stretch and contraction of price. It harvests the churn of global currency fluctuations. 3. The Sniper. GG-SARS. Ideology. Boundary mean reversion. The logic. A high-velocity specialist. The Sniper operates on the edges of market value. Using a 15/30ths reversal loop, it identifies when price has overextended beyond its mathematical no man's land, and executes surgical entries to capture the snapback to reality. 4. The Hunter. GG Hunters. Ideology. Dynamic zone capture. The logic. The Hunter is ambidextrous. Unlike traditional bots that get stuck in a static trap, the Hunter utilizes a dynamic bedrock that evolves with the price. It buys green and sells red simultaneously within a shifting arena, ensuring no momentum shift is left unmonitored. 5. The Guardian. TonoosReserve. Ideology. Equity preservation. The logic. The final line of defense. The Guardian's ideology is simple: survival first, alpha second. It utilizes a shift buffer and session purge logic to ensure that stale trades are never allowed to threaten the core capital. It is the leash that keeps the portfolio's drawdown within institutional limits. So let's look at the lead performer, GG-SARS. Earlier last week, we identified a bottleneck where the EA was locked in a buy-only cycle. In a professional environment, directional bias, of course, is a liability. Hence, we look to refine the vice versa reversal loop strategically, allowing the system to transition dynamically between long and short positions without human interventions. So far, we garnered a net profit of over $28,000 since Monday last, with a disciplined 5.8% max drawdown. We aren't just trading pairs. We are managing a single financial entity with a master target of $5,000 each trade session. Moving to the Sentinel. Domino de Dios. Last week provided a unique look at positive convexity. While the win rate hovered at 35%, the average winning trade was 40% larger than the average loss. This mathematical gap allowed the system to recover $7,000 in a single 9-trade burst. Despite a floating profit and loss challenge during the yen crosses, the equity defense held. We observed a maximal drawdown of only 5.74%, proving that our recursive rehedge logic could shield a 200K account even when individual legs are under pressure. Last, every laboratory work must evolve. With GG Hunters, we identified a static trap, a scenario where price skyrocketed on gold, but our floor stayed in the basement. We were leaving 50% of the market on the table. By migrating to version 18.5, we implemented a dynamic bedrock that drags the floor with the price. In less than 24 hours, the system smashed through its $5,000 target to bank $8.076. We are now winning on the way up and the way down, transforming a blind system into an ambidextrous hunter. In the interest of full transparency, we must look at the TonoosReserve experience. Quite devastatingly, and despite a 54% win rate, the account balance faced a massive loss event. The lesson was clear. A high win rate is a trap without a shift buffer. We observed account killers in the yen pairs that lacked hard stop-loss management. This data is invaluable, which are now engineering version 2.84, integrating a session purge and a 10-pip trailing gate. We are effectively putting a leash on the volatility that previously went unmanaged. As we move on to next week, we are migrating to symbol-specific isolation and a 10-pip absolute ceiling. We don't guess the news, we audit the math. We are restarting the trial to prove that version 1.15 can navigate aggressive volatility with zero manual intervention. PIP Resources Corp provides education and technology services for Forex, DOT, and equity markets speculation. As trading involves significant risk of loss, we do not take custody of client funds and do not provide investment advice or performance guarantees. Past performance is not indicative of future results. We trade the math, not the noise. See you in the next resilience report. In the meantime, please subscribe, like, and hit the bell button.